What's up, everybody? 360 in the house, and welcome to the 360 Elite Trading course. I'm so glad you guys are here. I hope you are pumped and ready for this lesson. This chapter is going to be on trend lines. Probably one of the most vital parts of technical analysis that I utilize. I am known as the line guy. I love fine lines, beautiful lines, clean lines. I am the line king. I don't get into all that crazy hocus pocus stuff. You can look at some people's charts out there and be like, what in the world is that? I am a KISS. Keep it simple, stupid. Why? Because it freaking works and is effective. This class is vital. It's not hard, but it's vital to your success in trading for you to get that, for you to get this. What is a trend line? A trend line lets you see market direction. It's that simple. Now, candlesticks, I can look at candlesticks and see the trend and see market direction. However, by drawing these lines, it cuts that picture into something that's crystal clear so that you can see exact areas of buying and support. That's right, trend lines are basically areas of buying and selling, support and resistance, and you need to see that. It cuts the noise, lets you see very clearly as if you were looking at it with binoculars. So yeah, you can look at candlesticks and see the trend, but by drawing these trend lines and knowing how to draw them and drawing them effectively, man, you cut out the noise and you can hone in and see defined areas of price action which become support and resistance. And that is absolutely the key. Now, here's a little secret. To be the most profitable in trading, you want to trade in the direction of the trend, not against it. If you want to have the best chance at setting yourself up for success and being profitable in trading, you need to trade in the direction of the trend. Right now in crypto, we are on the third cycle of the Bitcoin halving, and we are in the bull market. Therefore, we already know just from that fundamental data that we are currently in an uptrend. So we know we want to trade in that direction. Could there be downtrend lines in that? Yes. But if the overall macro trend is up, we want to trade in that direction. Can you trade against it? It's very hard. It's very difficult. People do it. There's people that will short this at resistance. I highly do not recommend it. It carries a lot more risk. It's a lot harder. And you just never know when the thing's going to take off like a rocket ship again. Play on the side of safety. Put the odds in your favor. Trade in the direction of the trend. These lines are going to help point that out for you. They're going to help keep you on track, help keep you profitable. And you can do these on any time frame, on multiple time frames. And these lines will help you notice areas of trend reversals as well. So you'll know when, there's something wrong with this trend. The smaller time frames, if you see a trend reversal in the smaller time frames, like let's say you're looking at the minute charts, the 5-minute charts, even the 30-minute chart, even the hourly chart, and you see this looks like it might be reversing, then you want to back out to the larger time frame. How bad does it look on the larger time frame? If it doesn't look bad, if it looks bad on the hourly, back up to the daily. If it looks bad on the daily, back up to the weekly, back up to the monthly, and see what time frame is this trend reversal happening in, and is the overall long-term trend still intact, or are we really in trouble? So you can spot time frames on the smaller time frame. You can spot, trend reversals in the smaller time frames, but make sure you back out to the larger ones to verify and confirm what you think you're seeing. A lot of people freak out. They're on the 5-minute chart and they're like, oh no, it's dropping. It's dropping. All hell's coming loose. And I'm like, dude, back out to the daily chart and this looks like a little paper cut. And when they do, they're like, oh crap, you're right. There's nothing really happening here. So those small time frames will freak you out. Just back out to the larger ones and see if the play is still intact. Excellent. Here's a 360 secret. I told you this chapter would have secrets. One of my secrets is I go back in history to find these time frames. Yes, we're trading. It doesn't matter. There's a lot of traders that never look outside of those 5-minute time frames, the 30-minute time frames, or even the hourly. This is a huge mistake. This is a huge mistake. You need to start with the larger time frames first. When you are drawing your trend lines, start with the longer, larger time frames first. Then move down to the next time frame. Then move down to the smaller time frame. Continue to move down as you're drawing your trend lines. Why? You want to make sure you are never surprised by support and resistance because you forgot to draw a trend line from a larger time frame. You'll be shocked at how important those long-term time frame trend lines are to the short-term trades that you're going to do. I'm known for this. I'm one of the few traders who goes way back. You'll see my lines and it's labeled 2015, even though you're on an hourly chart of something and you're like, whoa, why does it say April 2015? Well, because that's where that line comes from. That line has provided either support or resistance way back in 2015, and all of a sudden, it's back in view in 2021 and being used as support and resistance because that's how it works. Listen to this. The longer time frame trend lines are the most important. The longer time frame trend lines are the most important. The longer the trend line is, the more valid it is. The shorter the trend line is, the less valid it is. So if I'm on a 5-minute chart and I'm drawing trend lines on the 5-minute action, and yeah, it's holding up. That trend line might be holding up, but it ain't going to be there for very long. Why? Because it's a very short time frame. The daily one would be much more efficient at holding up. The weekly would be even more efficient at holding up. The monthly even more, and so on and so forth. I think you get the picture. I think we beat that horse to death. So how do you draw a trend line on TradingView? Excellent question. Just come over here to the top left. Remember, this is where you get your pointer, the crosshairs, right below it. You grab the trend line, click on it. You can left click anywhere on your screen and drag wherever you want to go. All you got to do is left click again and let go of it. That's it. Now I can move this puppy around. I can grab this, extend it out. I can shorten it. I can make it as long as I want. And I can grab it here and I can move it around the chart. However you see fit, you can just move it around. So you can slap one on there and move it where you want. Or you can start at price. You could start at price. Let's grab it again. And drag it to price. That way it's closer. And then make adjustments. And then make adjustments. Make small adjustments. Just by moving the ends until you get what you want. So drawing trend lines is easy. Practice doing it, practice doing it, practice doing it. You'll catch on very quick. But right now we've got some up here on Bitcoin. So this is a zoomed out monthly chart of Bitcoin. Takes us all the way back to 2015. And I want you to see this first because this is a long-term trend line. Basically, this lower line is the uptrend that started in 2015. So when you draw your trend lines, what do you connect? Do you connect the candle bodies or do you connect the wicks? And people are going to argue about this left and right. You'll have schools of thought that say, oh no, only connect the candle bodies. And then others are like, no, I'll connect wicks. Listen, here's the secret. You ready? Whatever gives you the most touches, that's what you're going to connect. And guess what? It usually ends up being a combination of wicks and candle bodies. I don't get into that game of, no, only candle bodies, only wicks. I'm telling you, you want to draw the line that gets you the most touches. And usually it's a combination of wicks and candle bodies because it freaking works. Because it works. Let's look at this one right here, 2015. We start out at the bottom of this wick, of this large candle. And we draw this trend line up through 2015. This goes to 2015 all the way to 2017. And it provided support. Look how many times it got touched. It got touched right here as support. Now we're touching the candle body as support. Candle wick as support. We're already in 2016. Candle body, we got wick, wick, wick. So this held up as support all the way from 2015 to 2017. Wow, 2 years. 2-year trend line. Now, I continued the line because we're going to see it comes into play later. Yes, well after the bull market. Well after the bull market. It comes back into play. Look at this on the bear market drop from 2017. It came back down to this line temporarily held up as support. Now, it didn't last. It did go below it, and all of a sudden the line became resistance. And then it broke back above it. It became support. Right here on these candles, it became support. Then it broke. It became resistance. It became resistance. This is already January 2020, February 2020. Look, it couldn't break through. It became resistance. Came back down. It became resistance right here before finally breaking it in the following month. November, it was resistance. The next month, it dipped back down. See this wick? Before finally busting through. So this line has been effective all the way from 2015 to our current market. Now, you say 360, there's another line on there. That's right. Trend lines in an uptrend generally connect the bottoms. However, I love to draw trend lines connecting the tops in an uptrend because it can give you a channel. Right here, we're connecting tops, as many as I can contact to get a channel. So I drew these lines starting back here, touch, touch. We have a touch right here, close here, but here it provided support. We got some support right here, some support, and then boom, we have a resistance right here before we finally get to, let me pull this up a little bit. Before we have resistance right here, and now we finally are back into play looking for this line. We are currently, as we speak, now looking to break this upper trend line. Look what happens when this upper trend line broke in 2017. It didn't happen immediately, watch. We have a break right here. Now we have it sitting as support. We have a retreat back under, but the price closed back above it. So we have a temporary retreat, a pullback. This was a huge pullback before price closed that month back above that trend line. All of a sudden, the next candle, look, retest it as support. It retested it as support before finally taking off. We have a deep pullback, again, testing this as support before finally running away. This was the parabolic portion. Right here in December is the parabolic portion. Guess what's going to happen here? It's probably going to see the same type of deal. We're going to see this upper trend line create and cause some problems, but once it breaks, I expect this to hold up as support and be a launching pad for our run of Bitcoin up into possibly the 90 to 125,000. But right now, this is the area that we are dealing with. This is the area that we are dealing with. So that's the long-term trend line that I'm looking at with Bitcoin. Hopefully that makes sense. Let's take a look at what that looks like on the smaller time frames. Now, once you draw these lines on the larger time frame, they're going to show up on the smaller time frame. So let's back down from monthly to daily. And we're going to squeeze this together so we can see the whole thing. So remember, I drew these trend lines on the monthly. And look how amazing that is. Look at this, respect, all the way from 2015 into 2017. Resistance, support, resistance, support, resistance, support. Now we break, support, broke through. Now we have support again. It's back tested as support before running away. It's tested here. It holds up. This is during the bear market. It initially holds up as support before breaking, becoming resistance, before this one comes back into play. Temporarily provides support before breaking. Now it's resistance, resistance, breaks through. Now it's resistance here. You can see it just, and now look. Here in February 2020, it provides resistance before finally being broken, becoming support, this was that pullback we had. It held up as support before finally running towards the top. We are currently running towards the top. That is how amazing history and the lines come into play from history. Use them, draw them, they are effective. So remember, do you connect candle bodies or wicks? Whichever gives you the most touches is how you want to draw your trend lines. Whether they're short-term trend lines or long-term trend lines, go for the most touches. It will generally be a combination of both. Let's go look at some more. Here's Ethereum. This is the monthly view, right here, the monthly of Ethereum. We have a line going all the way back from March 2016. So I've tried to draw the most touches here, draw through here to June 2019 and on up to where we are currently. Look what we're currently doing as we speak. It is currently testing this trend line, drawn all the way back March 2016. Look what happened when it broke it in 2017 bull run. I mean, it came back, tested it as support right here on this screen, and then blew up, and then now it tested it as support here. It held up before finally breaking. Look, tested now as resistance. See, this trend line has held up as support and resistance many times, perfectly to the T. From 2016 to 2019, perfect touch, perfect to the letter right here. This held up as resistance, couldn't break it, came back down. Consolidation, that means we were still in consolidation before finally running right back up. And you can draw more. This is just one example. And now this is currently what we're looking at right now. So you can tell from 2017 what happens when this trend line gets smashed. What do you think is going to happen right here in 2021 when this trend line finally gets smashed? That's right. We're going to enter the real bull market. Let's take a look at this price action on a smaller time frame. We're going to drop from the monthly to the daily. Let's open this up so we can see it better. Notice how all of a sudden the line looks arbitrary. This is the same trend line that we drew in the larger view. All of a sudden, you guys see me post my charts on TradingView and on Twitter, and I'll have random lines going across the chart. And somebody actually said, that's an arbitrary line. You can't just draw arbitrary lines on there. You can't do that. If they'd done their homework and followed that line back in history, they would realize the 360 trader did not pull those out of his butt. We are now on the daily chart. You are looking at a trend line from 2016. Ethereum has yet to test it. It will test this line at about 2K. I told you way back here that 2K was the target. How did I know that 2K was the target? I told you that because I already had drawn this long-term trend line. This is where we're going to probably find some resistance. Eventually it will smash it, probably come back and test it as support before doing a real bull run. When I posted this as a trade a while ago, this is also a long-term hold for me. People made a lot of money off of this, a lot of money, and are still making money off it because the target is still in view. We're currently at 1930 right now. This bad boy has plenty of room to run to the lower 2000s before it hits this resistance. Do you think it'll hold up as resistance? Yes. Is it random that it's right around 2K? No, it is not. That is the beauty of these trend lines. That is the beauty of these trend lines. So remember, start with a zoomed out trend line, work your way in, start drawing other trend lines. Start with the monthly, you can use the weekly, then you can use the daily, then you can get into the hourly, and you can draw more and more and more trend lines. Let's take a look at Litecoin. Here we have a Litecoin chart. This is the hourly. I'm going to show you a shorter term trend line that's on the hourly for Litecoin. Look at this guy. So when you draw your trend line, you want to pull it back as far as you can before it no longer works. Connect, connect, connect. I could come down here, but then it comes off the chart. I want to get as many touches as I possibly can. Let's see if I can keep going. pull this data in. All right, so the data starts moving left, so I know that's about as far as I can go. Let me make sure I have as many touches as I can get. Touch, touch, touch. I'm avoiding this noise. I want touches. So if I was to pull this out to here, to this width, I would have far less touches. It doesn't get hit as much. I don't want that. I'm going to go past price. Touch, touch, touch. Look at all these touches. A lot of wicks, some candle bodies. But I can get a lot of touches. We're going to keep it right to about right to there. That's where we start to lose contact. Right here. This trend line starts to work right there. Touch as support, support, support. Uh-oh, broke, resistance. It becomes resistance. Don't erase your trend lines once they're broken. Do not erase your trend lines once they're broken. Why? Because it's going to, if it was support, it could become resistance. If it was resistance, it could become support. And sure enough, you see this bad boy getting hit over and over and over. So I would let this puppy go as long as I can. Now this is a shorter term trend line. A shorter term trend line. It's an hourly. It's an hourly trend line. So draw them on multiple time frames to see what you need to see. Look how little that trend line we just drew is. I'm now on the daily chart. Do you see how this is less important than what you can draw on this one? Because look, that's it. That trend line is over. I can't pull that back anymore. So it's going to be far less effective than my zoomed out trend lines are. Far less effective than my zoomed out trend lines are. I just wanted you to see that on a smaller time scale. But right now, it works. On the hourly, it works. That's what we drew. That trend line works on the hourly. That's an example of how a shorter term trend line can be used, but it's pulled back as far as it can be pulled back. So those longer term trend lines are more valid. Let's take a look at Cardano. Oh, we got a downtrend line. Downtrend lines we connect the tops with. And here we've channeled it. We've been able to draw another trend line below that to get a channel where we have support, we have resistance, support, resistance, support. It kind of breaks through, but then it comes back in, breaks back in. We have it respected here before it breaks back out. But, so by looking at this, you say, oh, that's a downtrend. Cardano's in a downtrend. Remember, you're on the hourly. You're on the hourly. Let's back that up to the daily. Oh my goodness. All of a sudden, that's what you were looking at. All that is consolidation, and it's actually a bullish pattern. That's what I'm talking about. If you looked at that on the lower time frames, you're probably freaking out, going, oh no, Cardano is in a downtrend. It's in a downtrend. Nope. Backed out to the daily, you will see that it's simply a bullish consolidation in an uptrend. In an uptrend on the daily, that is in an uptrend on an even larger scale. Look at this puppy. Uptrend, new uptrend, and then we have this consolidation that if you were just looking at it there, you would think, oh no, this bad boy's in trouble. So here you get to see it on multiple time frames. Zoom out so you can get the bigger picture. Zoom out so you can get the bigger picture. Why use the smaller time frames? Because I use the smaller time frame to time my entries and exits, to time and set up where I want to enter it at. I get the narrow picture to time where to enter the trade setup. And we're not going to get into that in this lesson, in this chapter. We're going to get into it in other chapters. The shorter they are, the less reliable. The longer they are, the more powerful they are. Wow, we got all kinds of magic going on right here. We got uptrend lines with the SEC downtrend line, followed by other lines that are being used as support and resistance. I'm going to take these off because we're not talking about price action right now, just trend lines. Just trend lines. And we can draw more. to capture this shorter trend, we can draw more and draw them out past price. Draw them out past price. Here we have a lot of touches. It was broke. It broke back through on the pump and dump. And then this was the pump and dump on XRP that occurred. And then it's back to being respected. And now we have a channel. We're now using multiple time frame trend lines to capture price. So start practicing drawing these lines. Remember, it can touch wicks or bodies. Get as many touches as possible. Pull them back as far as they will go. Pull those lines back as far as they will go and send them past price. Send them past price so you know when they're broken or whether they'll come back into play in the future. Hope that makes sense. Another 360 secret is to draw them above and below price like we did right here. Above and below price. See, it's still a line drawn on top in an uptrend. But what am I trying to do? I'm trying to capture channeling price. That's called a channel. I'm trying to capture that because it still comes into play later. So don't just connect bottoms. Try to connect tops. See, can I capture price? And then see what happens to price action when those break. When they break it, what happens to price action? Draw them below, draw them above. Draw them, draw them, draw them. That's a 360 trader secret. A lot of people only draw uptrend lines on the bottom of price. And when you do that, it's great and it works, but it doesn't capture price action as effectively as drawing them above and below. And try to find those channels. Also lets you pull up many other patterns that we're going to need for our actual trading setups, like flags, pennants, all of those things. So draw those lines as often as you can. Get in the habit. Just start pulling up charts, drawing trend lines, and study how price is affected above and below. How many touches how reliable is it? Does it come into play in the future? How does it come into play in the future? And begin to study charts. Use my TradingView chart post to study what I'm teaching you in these chapters. Use my TradingView stuff. All right, now let's talk about some key points. I only find my trading setups and my plays after starting with zoomed out trend lines and working my way down. I use the hourly time frames, to establish my trade setups on entry price. And let me give you some tips. The only time I would go below the hourly, let's pull up the hourly here. The only time I would go below the hourly time frame is if I was scalping. Scalping is a whole nother type of trading. It's a whole nother type of skill. That is not something for everybody. That's people looking for very quick, very short moves. Scalping requires a lot of capital. So there's no reason for you to ever go below the 1 hour time frame. You just don't need to with cryptocurrency. We're not scalping. We're not going to be scalping. So don't do it. This stuff right here is just going to freak you out. Even in trading, I don't do it. Sometimes I might go look at the 30-minute just to see what's happening with volume and stuff. But for the most part, when I'm establishing where I'm going to enter, how I'm going to enter, I use the hourly. All right. So if your chart doesn't go back far enough in history, you may have to find a different pairing because each exchange only goes back a certain time frame. Some exchanges didn't trade Ethereum back in 2012, whatever the case might be. So if your chart doesn't go back far enough, pull up your pairing on your Bitcoin. If you're using Bitcoin USD, pull it up on Bitfinex, pull it up on Binance, and get as far back in history as you can. If for some reason your current, like this is Coinbase for Bitcoin, if your current selected exchange doesn't go back far enough, you could try to get more data by selecting a different exchange. That's a tip for you. Another tip is to, let's see. Here's a huge one that you need to know. Trend lines are not exact price areas. They are not exact price areas. exact price areas. They are actually, or exact price targets, I should say. Trend lines are not exact price targets. They are areas of price. Many times you'll see price go below it. You'll see price go below what you've drawn up there, like we had with Bitcoin. Let's see. Look at this one. Many times you have price going below, or wicks going below. Wicks going actually below. Like here, we've drawn it, but you have some noise down here. Let me explain that to you. Let's look at this one right here. Well, you say, well, this trend line, look, it broke below it. That's noise. This is an area. As long as any part of the candle, this is important, as long as any part of the candle, whether it be a wick or the body, is touching the trend line, then that trend line owns it and is still in effect. That trend line owns it and it's still in effect. So right here, it went below. You can say, oh, it broke below. That's it for the trend line. Nope. And look what happened. It broke back above it. Until you get a breakaway candle. This is a breakaway candle. Then the trend line still owns that price. And we broke away, price got off of it before finally coming back down to touch it as support. So a lot of people would see this, oh no, this was a breakdown of the trend line and try to short it here. That would have been a huge mistake. One, you're shorting it in a bull market. The overall trend is up. So somebody that shorted this right here saying, oh, the trend line broke, look what happened to them. They got jacked up. Why? Because the candle has not broken away, did not break away from the trend line. There's no breakaway contact. So as long as any part of the candle is touching that trend line, it is still an effective trend line. That is extremely important. That area of price owns the price action. That area of price owns the price action. Remember, the more touches a trend line has, the more important and reliable it is. The longer the trend line is, the more important, the more reliable it is. Let's see. Also, the angle of the trend line. The angle of the trend line. Let's break this back out to the monthly. Let's actually go back to Bitcoin here. And back to our monthly chart for Bitcoin. All right. So this is a pretty gradual angle. This is a pretty gradual angle. When the angle gets steeper, the steeper the incline of the angle, and you'll see this as you progress down the timelines. As you begin to drop down the timelines, these trend lines usually become more and more steeper. The steeper the angle, the less the length of time, the less long that's going to hold up. Why? Because price action is increasing very fast. When this thing goes parabolic, that trend line becomes extremely, look at the angle. It goes up very quickly. When it went from 9,800 to 20,000, that's this candle right here. We can break that down. Let's break that down. Let's go down to the daily and look at that trend, what that trend line would look like. Here it is. Look at this trend line. So we have this very long gradual trend line, and all of a sudden it gets steep. It gets steep. Trend line within a trend line. Touch, 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 touch. Now, watch this. So this one's more effective because it's longer. This one's a little bit less effective than the monthly. So this daily trend line is a little less effective than monthly. But watch what happens when we break down and increase our speed. So the more inclined the trend line gets, the less likely they are to maintain that for very long. We're maintaining the monthly for a long time. We maintained even the daily for a long time, but all of a sudden, this bad boy that would have shown up real good on the hourly and looked great is very inclined, very steep. The steeper it gets, the less like it's going to hold up for very long. So it's less reliable. The steeper the trend line is, the less reliable it is, and the less likely it is to hold up. It's going to hold up for a lot less time, a lot less of a time frame. All right, let's see what we got here. Remember, draw them out past your price. So, like I drew this one out past, it was violated. I knew this trend line was done. Now, he could have come back up and tested it, but look at this. Look how steep this was. So, this trend line ended very quick, so I didn't need it. Draw them past price. I drew it past to see if it would come up. It never did. So that rendered that one ineffective. So you always want to draw your trend lines out past price. That's how I do it, so you can see if it comes into play in the future. Look at this guy. This is tell. This is tell. I had drawn this trend line right here. I had drawn this trend line right here when tell was right in this area. When tell was in this channel, I had drawn this trend line on this price action, and look what actually happened. That is how I got this target. When I made this trade right in this area, when I made this trade and put it out there, I had already drawn this trend line, and look at my projection. That is why you want to leave your trend lines on the chart. You want to leave them on there, draw them way past price. I drew this puppy way past price. This was back in September 2020. It hit it in February 2021. 5 months later as a target. Beautiful. Perfect. That is why you go back in history to draw these trend lines. Man, it's a beautiful thing. Get in the habit of doing it. Draw them past your current time. Go way back in history and draw them. Pull them out. Those longer ones are more effective. Then go down into the smaller time frames. Continue to draw them until they no longer work or they're no longer in play. All right, guys, that's pretty much it for trend lines. We are in a bull market. The trend is up. So we are going to be following the uptrends to make our trades. I hope you guys enjoyed this class, this lesson. I can't wait for the next one. Study this, draw your trend lines, get in there, draw them over and over and over. Repetition, repetition, repetition. Look at every chart I put out. Look at every chart I put out and study what I'm doing. Write the tips down that I gave you. Write the secrets down that I gave you. Study them. You need to repeat this over and over. The more you do this, the better you're going to become and the easier it's going to be. That's all I got for this time. Until next chapter, here comes the boom.